Hello, traders, investors, and market enthusiasts. Welcome to this week's edition of Global Market Outlook. I'm Tolga, bringing you weekly insights and analysis for finance professionals and market enthusiasts around the world. In today's session, we will dive into key market events from the past week, ranging from stock sprints to geopolitical tremors. We will also forecast the upcoming week's crucial economic events and anticipate their impacts on global finance. So buckle up as we navigate the global market landscape together. The holiday shortened past week was marked by significant upward movements across major financial indices despite simmering geopolitical tensions. US stock markets achieved remarkable performance. The S&P 500 and Dow Jones both set new record highs, driven notably by technology and retail sector boosts. Investors were clearly bullish heading into the holiday season, with strong retail and tech performances, particularly from Nvidia, pushing equities higher. However, the Nasdaq hovered just below its record from 3 weeks ago, partly due to mixed signals in the tech industry. Bond yield witnessed a notable decline, with the 10-year US Treasury yield dropping to 4.17% from the previous week's 4.42% following the appointment of Scott Bessent as the incoming Treasury Secretary. This shift reflects market anticipation of potentially dovish fiscal policies. Amidst this financial scene were geopolitical developments such as tariff threats from President-elect Donald Trump targeting China, Canada, and Mexico, which rattled Forex markets. The Mexican peso and Canadian dollar faced pressures, while the onset of ceasefire between Israel and Hezbollah brought a temporary sign of relief, trimming the geopolitical risk premium on oil. Meanwhile, the DXY currency index struggled as market consensus tipped toward a probable federal rate cut next month, courtesy of dovish Fed minutes and solid employment data. Commodities saw a tumultuous ride, with Brent crude oil prices swinging yet ending the week relatively stable and gold wrestling with volatility but remaining above crucial price levels. Looking ahead, the week promises a slew of economic data and events likely to sway market sentiment across various regions. Monday, kicking off the week in the US are the ISM Manufacturing Index and construction spending figures. Down under, Australia will see retail sales numbers expected to illustrate consumer sentiment post-recent trade concerns. Thursday, the US JOLTS job openings will be scrutinized as they provide another window into the labor market's health. Wednesday, all eyes will turn to the ADP National Employment Report in the US, which sets the stage for critical non-farm payrolls at week's end. The ISM Non-Manufacturing Index will further define the economic contour alongside ECB Chief Lagarde's pivotal speech, shedding light on potential monetary policies. Thursday, weekly US unemployment claims and trade balance figures will hint at economic resilience or bottlenecks just as global trade pressures mount. Friday, anticipation builds toward the US non-farm payrolls report forecast to show a rebound in job creation up to 220,000 positions. As you may recall, October's payroll saw a modest gain of just 12,000 jobs due to disruptions like Hurricane Milton. Close attention will also be on changes in the unemployment rate, which feed into Fed's policy deliberations. Additionally, consumer sentiment results from the University of Michigan will round off a data-laden week. As we wrap up, it is clear that the markets remain at a crossroads between economic optimism and geopolitical caution. Stay tuned to the developments of the upcoming week as they unfold, and ensure you are subscribed to our channel for weekly market insights. We value your thoughts and invite you to share your perspectives in the comment section below. Catch you next week on Global Market Outlook for another deep dive into the world's financial markets. Until then, have a profitable trading week.